Ford and GM announced hundreds of more layoffs due to the ongoing auto worker strike. With thousands of workers walking out and production lines halted, what does that mean for the future of the American auto industry? Yahoo Finance is closely following this story as it unfolds.
General Motors and Ford have expanded layoffs at their Midwestern plants, furloughing another 500 jobs amid the ongoing UAW strike. For more on the state of the auto industry, Garrett Nelson, CFRA VP and Equity Analyst, joins us now. Garrett, great to speak with you here on this morning. First and foremost, when you think about how long these strikes have played out to this point and whether or not we're set to see an end in sight anytime soon, what kind of knock-on effect does that have for both of these names, Ford, GM, and then as well, even though there has been some progress for Stellantis, for that house as well?
Sure, thanks for having me. Well, we think the strikes could still go on for several more weeks. And one of the reasons we think that is because only a small percentage of the UAW is currently on strike. If you look, they chose to do these targeted strikes really to extend their strike fund. So for each week that a striking worker is on strike, they're paid $500 out of the strike fund. And so, this could go on for many more weeks, we think. And really, the two sides are still very far apart. It's not just wages where the two sides have come closer to agreement, but it's a host of other issues. And so that's why we think that this could go on a while longer, and we think the UAW, each Friday they're likely, if there's not significant progress in negotiations, they're probably going to announce additional strikes targeting certain plants of the Detroit Three.
Garrett, what do you think of the striking style so far? The fact that they are only targeting a small amount of plants or a few amount of plants each week, it seems like you were just saying. And I guess how much has it disrupted the supply chain so far versus what it could look like if this strike still goes on for another 3, 4, 5, 6 weeks?
Yeah, as I said, it's really meant to extend the length of the strike fund. If they had announced that there, strikes across the board at all the plants of the Detroit Three, it would have probably only lasted a couple months, that strike fund. But, this move really has put the automakers on the defensive. It's led them to guess, which plants might be next. And it's going to start to really impact the consumer. Because all of the parts distribution plants of both GM and Stellantis are currently on strike. And so that really impacts the ability of the dealerships to do repairs on vehicles. So anyone that has a vehicle that needs repair or maintenance, any GM or Stellantis vehicle, they're going to have some issues getting the parts from those distribution centers. So but it's really put the automakers on the defensive. And we think probably soon the UAW is going to announce strikes targeting the really high margin operations, the pickup trucks and SUVs of these three companies.
So Garrett, I just want to make clear. So consumers are already feeling the impact. We're already seeing some part shortages at certain areas for certain vehicles?
That's right. And really the main concern is the ripple effect that the strikes could have, especially on auto suppliers. There's 5,600 auto suppliers in the United States, and a lot of those are small, what we call tier 2 and tier 3 suppliers. They just don't have the robust balance sheets as some of the publicly traded larger auto suppliers. And so we think, those companies are the ones that could be running short of cash pretty soon. And I think you're probably going to see some furlough announcements and job cuts from those auto suppliers. As GM's CEO likes to say, for every one GM job, there are 6 others in the economy that depend on GM's plants running. So that really underscores the potential ripple effects of the strikes.
At what juncture would it require you, at least the time span of the strike, if it continues to go on, at what juncture would that force you to look at your ratings and kind of reevaluate the company's kind of outlook or even your expectations for them for either the rest of this year or even going into next year?
So our ratings right now, we have a strong sell on GM, and that's because we think they're in the most precarious position of the Detroit Three. heading into the strike, they had far fewer inventories at the dealerships. If you look across their four auto brands, especially Chevy and Buick, much lower inventories than either Ford or Stellantis. They also had less cash and liquidity than the other two companies. To be clear, all three companies have sufficient cash and liquidity on the balance sheet. That's not really a concern. But if you look at the three, GM is really in the worst position of the Detroit three. And we have holds on both Ford and Stellantis and are comfortable with those ratings. Stellantis in particular came into the strike with a huge amount of inventory. And so we think they can wait things out, longer than the other two companies.
How easy is it for these companies to restart operations that have either been stalled because of strikes or because of people walking away from the job and being away? And then additionally, even furthermore, I mean, how much is that operation going to change in the near term, either because of robotics or because of artificial intelligence that gets weaved in to the manufacturing process?
Well, it's fairly easy to restart a plant, but when it really gets complicated are the logistics and supply chain. A lot of people don't realize the average automobile contains over 30,000 parts. And so the automakers need to make sure they have all the parts required to restart and finish assembly of vehicles at these plants. And so, that's where the ripple effects can really come in. If it does damage to some of these auto suppliers and they're no longer able to produce and ship the parts that these automakers need, then there's a problem. So, that's really where we see a risk. And then longer term, we saw a 40-day strike by the UAW against GM just 4 years ago, back in 2019, and here we are again. I think the automakers, they're going to have to make some strategic decisions regarding where they want their plants to be longer term. And we think, one of the effects you could see is you could see more plants built in Mexico or in Canada. Automakers just not wanting to go through the same exercise every 4 years in negotiating with the UAW, who's taken a very hardline approach to negotiations, and they're going to extract very significant concessions, which is going to drive up the labor costs of the Detroit three. And so, that's why we think, really the biggest winner from the strike is Tesla, of course, 100% non-union company, but also some of the foreign automakers such as Toyota, Honda, Volkswagen, et cetera.
Garrett, let's talk about what's going on with Tesla, because we got the delivery and production numbers yesterday. They did fall when you compare it to the previous quarter. You're, though, not too worried about that. Why?
Sure. They left their 2023 volume guidance intact. And so, while it was a slightly disappointing quarter on the production and delivery side, they had guided to that on the last earnings call because they were taking some downtime at some of the factories. So that just means that because the guidance was unchanged for the full year, they're guiding for record production and deliveries in the fourth quarter. So that's kind of the silver lining. And I think that's why you didn't see much negative impact in the stock yesterday following that release. But if you look across the space, we continue to view the stock as one of the market's strongest earnings growth stories. We think this company's earnings can approximately double over the next 2 to 3 years, and that's just really makes them unique in the auto manufacturing space, and gives them one of the strongest earnings growth trajectories in the entire market.
All right, Garrett Nelson, always great to get your perspective. CFRA Vice President and Equity Analyst. Again, Tesla shares under a bit of pressure today, but Garrett, you got a price target of it on $310 a share. Garrett, thanks.
Thank you.
We want to bring in Tom Narayan. He's RBC Capital Markets lead equity analyst for Global Autos. Tom, it's good to see you again. So we talked to you quite a number of times over the last several weeks leading up to this strike. Here we are in week 3. What's the impact so far, do you think?
I think it's really too early to tell, right? We've seen it in the inventory data that just came out yesterday for the U.S. Dealer inventories are actually creeped up higher slightly, which you wouldn't expect to see in a work stoppage environment. But it is early, and so far it's only targeted specific plants from the D3, maybe only 20 to 25% of the North American production. So it's really too early to tell. The other cross current that's helping such a strong performance from these OEMs is, we still are in a recovery period, right? Post-pandemic and semiconductor crisis in Russia, Ukraine. So a lot of pent-up demand is there. Our inventory levels are still well below where they used to be. And that's, I think, supporting these sales. So too early to tell on UAW's impact. Again, it's only certain targeted plants thus far. It's only been, 3 weeks or so. But as you pointed out, probably October data is where you'll see a bigger impact.
Tom, at what point does this strike become an issue? At what point does that lead you to reevaluate how you're kind of looking across the big three automakers?
Yeah, I think thus far, it hasn't really been an impact. I mean, obviously, if we look at 2019, it's the last empirical evidence we had. It lasted 6 weeks. It didn't have that big of an impact, actually. There was a really quick snapback that happened. Certainly, if this thing lasts well over 6 weeks, right, several months, then it starts having some serious implications, political implications. These OEMs definitely have some big implications. But I just don't think that happens. The UAW workers only get paid something like $500 a week in strike pay. There's also political pressure from the administration for this not to last that long. So all indications are this will probably last something similar to the last strike, around 6 weeks. And I think OEMs have really strong balance sheets to weather this. Also, there's so much pent-up demand, more than what we had in 2019. There should be a really quick snapback. But certainly if this thing lasts for several months, then we probably have to reevaluate things.
Tom, what do you think demand's going to look like if, in fact, we do see this last maybe longer than we had initially anticipated? That, of course, could potentially impact production, vehicles available, which would then impact price. I guess, how material of a movement could we see if this lasts much longer than you and many of forecasters have been expecting?
Yeah, that's really the question that everybody's been asking. A 6-week period really would probably help the OEMs keep pricing elevated. It's probably bad for customers like us, right? But that only lasts for a few weeks. So the pricing impact of a 6-week work stoppage, it would keep things elevated for a limited period. If it's several months, now pricing stays elevated for perhaps an entire quarter. It keeps the pressure on volumes down. But I mean, look, these OEMs dealt with this, right? We had pandemic, we had semiconductor crisis, shortages is nothing new. If anything, some of the OEMs probably like this, right? Because it means they keep pricing elevated, and that's like really what's giving them record profits. But the longer this lasts, it's just not good optics. Also, it creates an affordability problem for folks like us. If we can't just afford to buy the car, it doesn't matter how much they'd love to price it, right? So the worst case scenario is if they're forced to drop pricing because retail buyers can't afford the car, and you have production problems because of a longer strike. That's the perfect storm that could hurt them a lot, because then you have both bad pricing and bad volumes. That would be the ultimate problem. But so far, we haven't seen evidence of that.
Well, what do you need to hear from not just the automakers and what they're putting forward to make sure that they're actually going to be able to maintain margins that the street has come to expect for years on a previous partnership or a previous deal that they had with the UAW? And how will that significantly shift your calculus going forward?
Yeah, that's the other big question, is what happens to margins with these labor cost increases? It's interesting. I think there's been some agreement coming in on both sides. They're moving closer to each other. So that's why I don't really think it'll be months and months. But we've done some math on the margin impact. It's actually not as severe as a lot of people think it is. It's maybe 100 to 150 basis point of margin hit because of, let's say, a 30% wage increase, which we think would be the midpoint of where both sides are. But the bigger problem is if price mix falls because of affordability, we're at record level pricing, right? Just try to buy a new car now. If that falls back to, if it's back to 2019 levels, that's like 400 basis points. That's like 4 times what UAW wage increase would do, right? It probably won't be that severe, but if I look at my peer group, other folks like me and their estimates, we're not factoring in any of this. That's the scary part. Is estimates probably need to come down. Now, the buy side, the investor community, you could see where the stocks are. They're already pricing in, I think, like a 20 to 30% reduction in numbers. So, maybe the stocks are fairly valued from the buy side perspective, but my peer group definitely needs to take their numbers down.
So, Tom, with all that said, we've long talked about how Tesla could potentially be a winner in all this as the strike goes on for some amount of time. Now, we've just got production and delivery numbers out from Tesla earlier this week. Despite the drop that we saw, they still reiterated their full year volume target of 1.8 million. Seems like a tough task given the amount of cars, the number of cars they need to deliver here in the fourth quarter. Do you think that's still realistic at this point?
Yeah, I think it is realistic, but I think more than anything, I think folks pay a little too much attention to the Tesla delivery numbers. The reality is, I'm sure you've noticed this. There's been a kind of a pivot that this company has made from just selling a bunch of cars to now trying to be a supplier of sorts, right? Charging infrastructure, power electronics, batteries, and then of course FSD, right? That's like the big thing. That's like 90% of our valuation for Tesla. So look, I get it. It catches a lot of attention. People are focused on it. I still think they could hit the 1.7 million, but I think what it showcases is this is no longer really a car company. It's really an autonomy company, and it's really pivoting to become a supplier to other OEMs, like we saw with charging infrastructure. Quite honestly, you make a lot more money selling software than selling cars.
You can tell by that a lot of people agree with you, given Tesla's valuation right now. Tom Narayan, always great to get your insight. RBC Capital Markets lead equity analyst for Global Autos. Thanks, Tom.
Major developments in the negotiations between auto workers and the United Auto Workers Union. UAW President Shawn Fain announcing a breakthrough in what he says will dramatically change negotiations. Take a listen.
We were about to shut down GM's largest moneymaker in Arlington, Texas. The company knew those members were ready to walk immediately. And just that threat has provided a transformative win. GM has now agreed in writing to place their electric battery manufacturing under our National Master Agreement.
And because of the developments, there is no expansion of the strikes this week. Automaker stocks trading near the highs of the day. And joining us now to talk about this is Arun Kumar, Alex Partners Managing Director in the Automotive and Industrial Practice. So Arun, let me get your take on the news here. Listen, UAW Shawn Fain, you heard him there saying there's been progress, no new strikes this week. Is this maybe some ray of hope here, Arun, for getting an actual deal done?
Thanks, Julia and Josh. Great to be on the show. I agree. I think this is a great development for both the auto OEMs, automakers, as well as the UAW, because it allows us towards a path where we can actually get back to doing business, which is to produce cars and sell great vehicles that consumers are looking for, which is in great demand.
I had to laugh. Josh and I both had to laugh when we saw Shawn Fain's T-shirt that he was wearing as he was making this latest announcement. Eat the rich. And obviously, his rhetoric has been sort of anti, quote unquote, fat cats or what have you at the top of the automakers. There he is. We're showing the picture of him in that shirt again. Does that, how does that factor? I know a lot of this is performance, Arun, but how does that factor into how this all gets gamed out when all is said and done?
Well, Julia, at the end of the day, what you say in public is one thing, but what you do in private negotiations is a completely different thing. I think when you look at private negotiations, you're looking at basic facts and data to make decisions. And I think the crux of the matter, if you think about it, is that, EVs require less labor hours to produce, which means that, the UAW is concerned about how they're going to keep up with that, transition to electric vehicles. And, the one way of looking at this is if you bring in more manufacturing back into the UAW and into North America, it's going to help them both from producing great vehicles as well as making sure that their labor force is fully participating and is able to earn a living like they've done in the last 30, 40, 50 years.
And I did want to ask you, Arun, there was some news here today. UAW Shawn Fain saying apparently that they did reach a deal with GM to include workers at a new battery joint venture in a new labor contract. What's the significance of that to you, Arun? Is it meaningful?
It's pretty meaningful because when you look at a battery electric vehicle, 30 to 40% of the cost is in batteries, cells, modules, and then you have the entire battery pack that goes into the vehicle, right? It's like an engine and a transmission in an internal combustion engine. So till now, most of those battery production has been with a joint venture with whether companies like Korean companies or some Chinese companies, or we've been importing batteries from China. So I think, having those manufacturing plants into the UAW mix allows expansion of, jobs that could have been lost because you have less labor hours required to produce EVs. Now, you want to make sure that you're not losing more of that, with batteries, because if those are outside the master services agreement, as Shawn put it, then you have less and less labor that's required to assemble the rest of the vehicle. So that's been a big concern and a crux that had to be sorted out, and I think that's a great sign of progress that we have seen with this announcement.
Arun, one of the interesting things that you guys have been working on that's a big concern for your clients is riding this out and having enough liquidity to keep operating even as things are slowing down as a result of the strikes. How have you been talking your clients through this period?
Look, Julie, we've been talking to a lot of clients. Everybody's concerned about the duration of the strike and what's it going to do from a liquidity standpoint, right? We all know that the interest rates have gone up, and that's not helpful for the first-tier automotive suppliers, and especially the second-tier automotive suppliers. These are not large suppliers. They are so dependent on production humming, allow them to have money coming in terms of revenues, and then being able to order materials and pay their labor, right? So if that stops, it's going to be a huge problem for that. So in Alex, what we have done is we have developed a liquidity model that looks at several factors and kind of gives you an idea on how long each company will have from a liquidity standpoint. So when I say liquidity, is basically the cash that the company will have during the strike, and can they ride out the strike without having to go bankrupt, right? So our analysis is that if the strike goes for 8 weeks, we're looking at about 58 to 60% decline in revenue sales, right? We're looking at that type of time frame, it's going to be tough for a lot of the second-tier suppliers to be able to survive because cash runs out and you can't operate the companies. And we saw that during COVID as well, when money ran out, without the support of the automakers as well as the federal government, it was really hard to keep these suppliers afloat.
And Arun, let me ask you, you know this space as well as anybody. You follow this story very closely. What could a deal ultimately look like, Arun? What do you think a deal could look like that would really satisfy both the UAW and the Big Three?
Well, Josh, I think the crux of the question is the EV side, right? I think to me that's a big piece of it. I think with the progress that we have seen that GM and UAW make, that's a very positive sign. I think the other piece is really around the labor wages, right? Because I think in the last contract negotiations, there was a lot of give. We all know that. And, it was a shared sacrifice, if you go all the way back to 2008. And I think, with inflation, interest rates, and affordability being a problem from a housing as well as the vehicle purchase standpoint, I think it's fair to say that some part of that increase needs to be compensated by better wages. And I think in Alex, I think when we looked at the profit margins, it's pretty healthy. But again, you have to think about automotive as a cyclical industry, right? When you make profits, which has been historically significant the last 3 years since COVID, but it's a very cyclical industry, so you may not make a profit in the future, so you got to protect yourself. The other thing is, when you look at the investments that's required to transition to EVs, we're looking at $600 billion worth of investments. This is an Alex Partners estimate that the OEMs are putting in for the next several years to be able to transition, be competitive with not only just the startup OEMs, but also Chinese automakers, so that we're coming out of the other end pretty strong.
Arun, thank you so much for stopping by today. That was great insight. That was Arun Kumar from Alex Partners.
Well, thanks for having me on the show. Thank you.
Well, Mack truck workers joined the picket line this morning. 4,000 members at Volvo's Mack Trucks voted to reject a tentative 5-year contract on Sunday. Yahoo Finance's Pras Subramanian has more on this story. Hey, Pras.
Hey, Brad. Yeah, kind of a surprise move here, Brad. UAW members at Mack Trucks rejected a tentative agreement by a 73% no vote of a deal struck by the two negotiating sides, the two parties, last week. So now the workers, as of 7 a.m. this morning, will walk off and join the picket line, striking at plants located in Pennsylvania, Florida, and Maryland. UAW President Shawn Fain said in a quote, I'm inspired to see UAW members at Mack holding out for a better deal and ready to stand up and walk off the job to win it. Conversely, Mack Truck CEO Stephen Roy said he was surprised and disappointed, quote, by the rejection, claiming the auto truck maker bargained in good faith with the UAW. But nonetheless, members that had the final say here, Brad, they can say whether they want the deal or not. It seems they didn't think it was good enough, I think showing more resiliency than even the union thought.
Pras, when we talk about some of these issues here among union workers, bringing it back to the big three and what we're seeing there, GM at risk of potentially seeing a shutdown in some of their Canadian plants. Where did those talks stand?
Yeah, as of tonight, there's a deadline tonight, 11:59 p.m. Eastern. If Canada's Unifor Auto Workers Union doesn't strike a deal with GM by then, they'll also go on strike there. So the Unifor union saying that GM hasn't actually modeled the sort of pattern agreement that they struck with Ford earlier last month. So they're kind of surprised GM is not doing that. And there's some sticking points in particular with things like wage progression and benefits like retirement stuff. So there are some issues that are still kind of ongoing. And it seems that they're waiting to the last minute here to possibly make this move. And it seems like potentially GM another headache for them, at least north of the border.
Hey, Pras, how much of the same sentiment? I mean, we saw Shawn Fain, UAW president, wearing the Eat the Rich shirt at his most recent briefing. How much of that same sentiment cascades over when you think about the other negotiations that are taking place outside the UAW and focusing more on kind of that Mack truck worker?
Yeah, I think that T-shirt sort of said a lot about what's going on in this country and maybe elsewhere in terms of labor and sort of the potential to strike a lot of concessions from their negotiating parties. I think they think that this is the time for them to move. A lot of companies still making a lot of money, even in this situation where there might be some global uncertainty and some sort of concern about higher rates. I think the workers say, hey, you guys are making billions of dollars in profit. It might be our time. We saw that with Starbucks, saw that with the Screen Actors Guild and WGA, things like that. So I think that we're seeing that T-shirt is an indication of how far they can go. And I think the workers see that as a rallying point. Shawn Fain talking about how this is a righteous battle, using religious terms in terms of we need to help out the middle class, the lower class people right now. And I think that's sort of what you're seeing reflected here with Mack Trucks. I mean, this is a surprise move by the rejection. I think people did not see that coming. At least the Mack Trucks CEO didn't see it coming either.
All right, Pras, thanks so much for that update.
General Motors is facing the risk of another labor strike, even as it struggles to reach a deal with the UAW. 4,300 workers at its Canadian plants are threatening to walk off the job if they cannot reach a deal by midnight tonight. Let's bring in Yahoo Finance reporter Pras Subramanian for more on this. Pras, this is certainly not good timing for GM, but what are the key sticking points right now?
Yeah, well, it seems that Canada's Unifor is saying that GM is resisting some of the deal elements it struck with Ford Canada, right? So basically what happens is the unions will use their first deal, in this case with Ford, as a pattern agreement to use with the others, right? So in this case, Unifor was able to get a 25% wage increase, COLA protection, and cutting top pay wage progression time to 4 years for those workers. Now, Uniform says GM is resisting to budge on issues like that, including expanding benefits to GM's full-time temp workers, a universal health care allowance beyond what Canada's national system uses for retirees, and then also outlining future projects and hiring commitments. This is kind of a big deal, namely with new factories and things that will build they'll build batteries and next-gen vehicles. So, like you said, if no deal reached tonight, potentially 4,300 GM workers will go on strike. So those are the sticking points right now as the deadline approaches.
And Pras, what's the very latest on the UAW strike? We now have an expansion into Mack Trucks.
Right. So today, Mack Trucks, they're UAW workers there at Mack Trucks rejected a deal that the two sides actually agreed upon by 73% no vote. Now, what happens here is that the actual UAW members, that the vote is the main important determinant as to whether the deal is going to happen, and they rejected this deal. UAW President Shawn Fain said he's inspired to see UAW members holding Mack Trucks out for a better deal. Conversely, Mack Trucks CEO Stephen Roy said he was surprised and disappointed by the rejection, claiming the truck maker had bargained in good faith with the UAW. So nonetheless, you see here that the UAWs have the members have the final say with any deal. And if they don't think it's good enough, they're going to show some resiliency, which I was surprised by. And I think even the union was surprised by as well.
Yeah, all the actions. Certainly keeping you busy, Praz. Praz Subramanian, as always, thanks so much for that.
Thanks.